Julia, some steep falls today. Why?
It looks like the market's still suffering a bit of a hangover from what happened in the US on Friday with the non-farm payroll numbers disappointing, but also there's real lack of offshore interest in markets around this region at the moment. We have seen the Shanghai Composite underperforming in 2014 and the Japanese market coming under a lot of pressure today. In fact, the view is that the developed markets such as the US and the European markets will once again be outperformers in 2014, and with valuations on the US as well as Australia still looking pretty stretched, I think a lot of money managers are getting a little bit nervous. On our market today, this is what it looked like, and unfortunately yesterday we were talking about the 50-day moving average being breached, which stands at 5,293 points. This morning, right on the open, we saw that 100-day moving average being breached, 5,268 points. So the next level of support that we're watching is a 200-day moving average, 5,126 points, and of course if that's breached, we'll be watching that 5,000 point mark where there has been a lot of buying support. Looking across the market though, every single sector traded lower. In fact, every single stock in the top 20, only 2 stocks out of the top 50 and only 4 stocks out of the top 100 managed a gain today. So if you're interested in the 4 stocks in the top 100 which managed a gain, they were Illumina, Aura, which is the offshoot from Amcor, as well as Fortescue and Worley Parsons. So unfortunately, another terrible day for the market.
Particular saw some weakness. The big 4 banks look just caught up in the sell down, or anything specific do you think drove the sell-off for them?
I think one of the keys of January is that we see money managers from all around the globe looking at asset allocation for the year. So which particular sectors they think are going to outperform, which countries are going to outperform, and that really moves which way the market heads. We have a look at the Australian share market because it's relatively small in the whole global scheme of things. We make up around about less than 1% of the world's stock markets. International investors don't trade a huge handful of stocks. They basically trade the big 4 banks, BHP, Billiton, Rio Tinto, and maybe Newcrest Mining, but there isn't a huge basket of stocks that they trade. So when we do see, I guess, international investors positioning portfolios, usually the stocks that are impacted are the big 4 banks, BHP, Billiton, Rio Tinto, and I think that's what we're seeing here.
I think continues through the year?
I think if you have a look at the banks, it's very hard to see earnings growth. If you have a look at the last financial year, we saw an average of 8% earnings growth for the banks, but if you strip out the bad debt component, that was 5% growth. Now, if you're seeing bank capital growth in terms of share price growing by 80 to 90% over the last 18 months, and you've really only seen 5% growth after you strip out the bad debts, then you have to question, you know, what's happening in terms of the banks and whether we have seen the share price running away from fundamentals. Now, this financial year, the banks are expected to grow at around about 5%, but really that's pretty meagre. You know, you would expect to see much higher rates of growth for capital appreciation of 80 to 90% over the last 18 months. So the banks, I think they've been popular for the same reason Telstra has, and that's because of the chase for yield as interest rates have been falling. But we are expecting interest rates to remain steady in Australia this year and then potentially rising in 2015, and that means a tilt more towards the cyclical plays rather than those yield plays.
Over the outlook, if you like, for these companies that are seemingly benefiting at the moment from this Indonesian ore ban?
I think this is a short-term trade. What Indonesia has banned is the export of raw ore. If the ore's actually being processed or refined in Indonesia, then there's no problems in exporting it. So what Indonesia is trying to encourage is the refining and the processing of the minerals actually in the country. So short-term, it's a potential trade, but medium-term, what you'll probably find is the market moving to either process or refine ore in Indonesia, or we'll see more supply coming online. And the rare earth industry is a perfect example of this. We saw China, the China export bans on rare earth, seeing an initial spike in rare earth prices, but then over the last 52 weeks we've seen rare earth prices absolutely plummeting down. So I think the big area to be watching is those nickel plays, because Indonesia is such a big exporter of nickel ore, and in fact supplies around about 50% of the stainless steel industry in China, which is absolutely massive. So Western Areas is another one we've been watching, which is up by 4.3% today. But I think a good short-term trade, medium-term, be a little bit cautious, because I think the market will move to fill those gaps in.